Okay, let's get started, Joe. Thanks. That's okay. I'll take over from you, John. Thanks. Thanks, John. Thanks very much. Yep. Okay. Look at this genius. Welcome to the Profit Hunter Group forecast webinar for world indices. Now, stock market strategy for 2015 in the world. We're now entering a little bit of negative time. And here's our disclaimer and warner. This has been prepared by Ideal Financial Group Proprietary Limited, CAR 299753 of Aruda Proprietary Limited, AFSL 338674, and Adesk Trading Proprietary Limited. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. It's prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement PDS issued and available from i-deal.com.au prior to investing. When you're doing that, have a talk to John Robertson, JR, as you've just heard, a very good broker and can help you with a lot of things. He's also, you might be trading with CommSec, but to have two accounts gives you that ability to, if CommSec's got a problem, or if you don't like the way CommSec trades, because I know CommSec tends to be a little bit more expensive than most platforms, and JR's I think is included. You might want to trade through them and invest in using CommSec. We find a lot of active traders love using the Ideal platform once they get to know how to use it. So we've made every effort to ensure the accuracy of information as at the date of publication, and Ideal gives no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligent or otherwise. The information provided may be based on assumptions or market conditions and may change without notice. Blah, 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 blah. You basically should work out what you're doing. Blah, 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 blah. Here's the gig. Interest rates have fallen down into support. So now bloody what? What do we think we should be doing with that? And the answer is, we don't know. The bonds have basically come down enough. We've hit this period and it's now getting into a bit of a rally period, I believe. So we've closed out some of our bond trades. We'll look at those a bit later on. Now, when I look at this, I just shake my head, really. Why? Where are these people? Now, ASIC regulates me, so it's probably a bit of a bad idea to talk about this, but they're only just noticing that a bubble exists in the Sydney property markets, and I don't get how they could not have already been taking measures against this, particularly to do with low interest rates. The low interest rates are the problem, but they're a solution to a problem that's even more disturbing. The disturbing problem is the fact that people with large amounts of cash, who, if we carried around cash in such large amounts, we would be arrested and taken to anti-money laundering place and hung out to dry. But what happens here with our friends from the governments is they're saying, oh, there's a housing excess speculation. Yes, there is. Well, start to do something about it. That would be a good idea. Now he's starting to be quite worried in Sydney and Melbourne. But the reality is, he's true. He's right in one respect. He says they're borrowing very low interest rates. They're starting to borrow far too much than they can afford. Now, the governments start making noises, but they generally act at the wrong time. So they will act in too late to increase interest rates, and they're going to keep them low because they think that it helps the economy, which it doesn't. It doesn't actually help the economy very much at all. What it does, when your economy only produces things like building houses, then people invest in building houses. We don't make that much. If we were smart and clever and had enough people who would run around and build things and make things, then we had to have a place to invest in. We had the famous Joe Hockey, let's invest, let's borrow heaps of money. So ASIC chairman is actually saying the opposite of what Joe Hockey was saying. So we're just stupid, really. And they're going to start to tighten, but at some stage. Now, South 32 has debuted. We'll talk about that a bit later. And we'll look at the charts and what it means. But governments do everything wrong, really, and they exacerbate things. They should be restricting investments from overseas, but instead they see it as a reason to get a budget surplus in New South Wales by allowing Chinese to buy whatever they want and lock it up. Around eastern suburbs, the rental property market has fallen through the floor in the prestige area because Chinese have bought it. They either lock them up, and now the places are for lease. You can lease some pretty nice places now for some pretty reasonable money in the eastern suburbs, which I guess is a bonus. Anyway, so timing is now negative. For the next 2 or 3 weeks, we've got a 1 in 3 chance that the market comes off. Watch the turn tonight or tomorrow in the US. We've all seen the year forecast. Basically, the normal year says up. Longer term cycles say buy a dip in the end of May, which we're running into. So I think for the next couple of weeks, you have the ability to see the sell in the May and go away thing happen. Now, why do I think that? Let's run into the patterns quickly. Oh, as you can see, South 32 did what its name said and went south. What I am curious about is when you look at the data that comes in here, you see up here it says trade and bid and ask. You can see that they were doing bid, ask, bid, ask, bid, ask, bid, ask all the way through. And over here, they started to trade with each other. Looks like about 9 o'clock, around about 8:59 this morning, there were actually trades done around about the $2.75 mark on South 32. So if this is true, and you can see maybe this is the institutions trading, millions and millions of dollars or millions and millions of shares were traded around this time, sometimes up to $10 million in a tick, 10 million shares in a tick. Now, I don't know how to verify the veracity of that, but you'll notice here that when it started to open to the public, people they'd already traded 275 with the institutions, if this is true. You can see it floating around. You can see it floating around here. And really, they closed it down. Now, if you use an Elliott wave count, this is a classical Elliott wave count. And what would you say about this wave count? You would say that up here, 1, 2, 3, 4, something like that, not being able to get above there and closing lower. Now, they've deliberately closed it lower to make it look bad, in my opinion. So it'll probably run up to 214. The high today at $2.22. The open at $2.13. Sets up a vibration of 21 cents. So in terms of the vibration, maybe it goes down to $1.10, maybe up to $3.30 at some stage in its life. So let's get moving. Why are we negative why am I a little bit negative? Well, the Friday, Monday thing. That's pretty easy to sense. We've got the Dow coming up to new highs over here, trying new highs. There it is, traded up to 18,272 and 18,288. Not quite made. Volume was good last week, but if it's a Friday, Monday trick, it may run tonight into 18,329 and reverse. So watch that little trick tonight. I think they might want to get it really bullish tonight and then slap it down because it's just entering a negative phase. Same with E-mini S&P, and forgive me for what's going on in the charts. There's some strange things for my screen. The monthly charts are still good on the E-mini S&P. The only trick is if it broke down below 2060, that would start to make it look negative on the longer time frame. At the moment, there is no trend to the upside, so you could expect more. This pattern here looks like a struggle street pattern. We're going to refer now down to the lower time frame and I'm going to just see what. I'm going to do a quick scan. So at the moment we've got nothing and up in wave threes, and we're going to see what the Dow looks like in terms of a wave count for a longer time frame. Pick up this one. There's two lots of Dow Jones Industrial Averages, always a trick to pick up. It says it's wave 3. Now, we need to thank our dragon for this little help here. So this is saying wave 3. The current little rally has some signs of being a wave 5. Notice here it's saying wave 5 in blue across here. This is the blue wave 4, and this would be the blue wave 5. We also see some extensions coming in. And on this extension, what we see is some deep retracements and pullback, and a little bit more up, we would start to think we're doing wave 5. Does anyone get that feeling? These strong, deep retracements. Now, this can either be a runaway market, in which case it's going up big time, or it can conform to a bit more of a pullback just to stupefy everybody. My belief is it'll probably start to stupefy everybody. Why is that? Just because that's the way markets work. They're just there to stuff your head, really. Let's see if we can see the same pickup thing in terms of the E-mini, if I've got it on here, which I don't think I have. Here's the S&P 500 cash index. Let's look at what its wave count is. And the S&P is counted differently. This is an expanding triangle. We've seen those, haven't we? Notice the movement that way and that way. On the larger scale, it thinks it's in an ABC pattern. Now, I've mentioned to you before that that's what I thought, and the machine didn't think so for quite some time. Now it thinks it's in a struggle street pattern, and yet it requires on a longer term time horizon 1821. Now look at this. It thinks that it's in a running triangle on this time frame, which would be 3, 4, 5. a running triangle. How does this work? I don't know really, but basically here we're starting to see the right pattern. And even if it got towards 2189 or 2232, we'd have to be thinking we're in the final legs of this, with interest rates in the US staying low in the short term, but edging up in the longer term. Now we have another 6 months before the president of the US is decided, the future president, which is probably Mr. Hillary Clinton. And what that means is that for the first time ever, there will be two presidents in one bed, if they share a bed anymore. I'm not sure either of them probably wants to sleep with either of them these days, but that'll be curious, and I'm sure the American public will do everything to get Hillary in. So I think Hillary will go for it. Whoever they put up does not have the fame of a Hillary Clinton, and once that's in play, then maybe interest rates can go up a little bit in the US. But right now we've got a pattern that can take off and run fast, still go higher, but if it collapses, we get a bigger correction, maybe as low as 1821. What else is there? Let's look at the potential on the Nasdaq. And we all remember the Friday-Monday relationship, don't we? Often they close it high on Friday just to suck us in to think it's going up, and then they smash it down. Now, we're looking at the Nasdaq, and this is the one that I think is behaving the weakest. Now, the machine thinks the trend is neutral, and we should worry about it only if it gets below 24.94, which is somewhere ridiculously down here. Notice on my system, we haven't actually seen an all-time new high. Close, but no cigar. Okay, so we've matched a few targets. We've got a bit higher target here to 45.90. So there's a bit more on the Nasdaq, but personally, I think just for the next couple of weeks, there's a bit of a risk of a dip. Let's look inside the hourly chart to see if that's reasonable assessment. We can see on the hourly chart we've got some locked in. If this was to break down below 21.15, it would start to show signs of needing to fall. And then absolute confirmation is below 21.09. When we see the rally at the end of the day, it's okay, but it's a bit of a fizzler. So further breakdown below here says problems, down to 21.03. Volatility is incredibly low at the moment. If it gets to start up again, then we'll start to see it market roll over. So watch tonight, tomorrow, and into tomorrow to see if it can move to the downside or move up cleanly. If it moves up cleanly, we're going to get on board. If it moves down clearly, we'll start selling again. Let's pick up the volatility index, and then we'll start to move on a little bit quicker. I want to do some small things on commodities later on for those people who are missing out. 11.29 on the downside. That would be a nice area to pick up volatility if you can get it, with a stop below 10. Usually say a stop below 10. Now this is the VXX, and we're still lurking down here with a PHG trade order at 1876 and 1839 on the downside. So that's a good area to pick it up if you can get the chance. Notice it's forming a struggle street pattern. And so a buy, we're going to have a buy and a break above 2104 for this. So here we've got here VXX 2104. Notice the trailing entry has come down. And the stop loss, if we're buying on entry, would be 1856 stop close only, or $20.25 price. That's if we're buying the break up. TBT is another one. We wanted to take profit market on open. We've been long TBT. And I didn't cover that today, and I apologize for those people who did. But notice TBT, I said to take profit market on open on Friday, and that was 49.72. And notice it's backed right off. So 47.52, I think we might have been took on that one. Okay, so we're out of everything on this one. So we've been filled. What was the level? 49.72. So unfortunately, I think we have a rollover in TBT, so we're not going to be playing the game with TBT at the moment. That linking in there, we might be looking back down to 42.66, and the implication is that bonds may be starting to rally. So we took profit on the bonds and stuff this morning, and the TBT, we can't do anything about it tonight. So we've had a short on, and I don't think that's been popped on the stop yet on the E-mini. Yep, so we're still short. If you're wanting to go short, it's really break below 2106. So we'll sell more. $2106. And we'll have that sell more on a break. So I don't mind getting ready for that sort of move. DRYS we've got on, and forgive for the people who are interested in something else. We've been buying dry shipping index stocks. It's had a nice run. It's got to make a decision soon. Stops needs to be moved to 74 cents price stop. No, 73 cents stays as it is. We're in actually at 73 and 75 and 74 cents. The other one that we look at is GDX. GDX backed off a bit the other night, and while it has some nice movement, it's still not setting the world on fire. Let's look at what gold has done. And gold put itself into a weird position. We've been looking for 1245. Gold's sort of in a strange position. 1245, 1251 would be the logical area you can expect it to. So GDX is still something that we're interested in. And failure for it would be below 1218 on gold index. So GDX probably has a bit of a rally. Now, in terms of what are we going to do next, let's have a look at what the German DAX is doing. In terms of wave count. Now, my belief is that it's really just pulling back at the moment before making another move up. What happens is that this quantitative easing things are really important in the minds of governments, which they shouldn't be. But I think we can come back down to, say, 10,516 at the moment, just have a bit of a correction, and then start up again towards 16,720, or more more easily 13,366. So if you've got a chance to buy into that, you would do so, and your stop loss would be on the German DAX would be below 1447, which doesn't sound like anything much. Sorry, 10,021. Let's have a squeeze and see what the German DAX has been doing now. So the German DAX ain't getting started. It's bumped into overhead resistance, and I think it wants to roll 10,849. Just get down there and then have it try up towards the higher levels. The German DAX, I'm not that interested. Now I have been liking the European peripherals. So let's look at the Euro Stoxx 50. It's not behaving that well. I'm not sure what it's actually. This isn't what's going on tonight. It's not updating for me. Let's see if it updates on this. Yeah, notice it's at the edge of the bullish cloud. It's touch and go as to whether it'll have a quick rundown. So another break below 11,392 pops it lower. What about the Italian MIB, which the one we all come to know and love, as a strong index finally? It's gotten knocked off today. As I said, that rally I didn't quite like. So probably looking for 21,655 on the downside. Let's FTSE it before we go anything further. Then we'll look at Asia. FTSE's actually not giving us any data, but it's a mess. I'd rather leave it alone while the other ones aren't doing so good either. So that's the plan. I wish I could tell you anything more scintillating, but I think we're on a tightrope, basically between the fact that it's trying to get through new highs in US equities. The European ones are a little bit weaker, and the pattern. So we've got time cycles coming in that the market should roll over from over the next couple of days for a couple of weeks. We've got a pattern of the market trying higher, but I don't believe it. I think it's going to have trouble. So the volatility index is and the VXX is in the way. Forget about the Russian stock indices. Now this is the year of the goat, as we know with China. And on the weekend, I had the pleasure of watching Daryl Guppy, who I always thought he used to talk to me. Must have been 20 years ago. He used to ring me up and talk to me. I thought he was a bit loony at the time before he started. I knew he started. I hadn't known he was starting writing books. Anyway, he used to work at Aboriginal stations like my ex-wife's parents used to it, and I think he was actually at Erna Bella at the same place that they were at. So he's done a lot of time in China and knows the areas well. He was saying that there are special patterns in the Chinese markets that really are different to the Australian market. And I went back and I had a look at them, and guess what? I couldn't see where they were much different to the Australian markets. Now, in terms of the individual shares, what we see in the stocks is rampant speculation. Now, the Chinese stock market has been doing really well, and lots of young people have been getting in there and making lots of money. And what he said the patterns are is that of herd mentality rather than manipulation. Now, I suspect it is manipulation, but the government starts it and then the herd follows. So we've seen the really good move in the Chinese market, as predicted, that this year would be good. But at the moment, I think that China is going to churn a bit more from mid-May onwards. The FTSE really never got its head above. It's still got a bag on its head. So the next one that I want you to see is the Chinese index, and we'll have a look at it, see how it did today. See here, been doing 50% retracements. It's going down to 44.20. So if this was normal, 41.28 will be possible on a break below 4,400, or 37.50 would be the normal. It is pulling back. It is pulling back on lighter volume, which is normal market behavior. Here are Bullhorn's warnings. We have 301 in the US optional stocks, with realty, healthcare, and pharma being important, and Croc, which is an Australian ultra short, being Bullhorn's warnings. So here's Croc. Is it going to rock? Notice that it's coming back onto the old tops. So this is where you would think that it would be any good. But notice the wave count that our machine's giving us, an ABC with a 1, 2, 1, 2, 3, 4, 5, which means that the bearish Croc may have some more movement to the downside. Where would we decide that this would breaking up? It would be through this area here around about the $54.20 area, 20 cents area, that would make me think that this is going up and the Australian market can go down. This is a negative stock on Australia. Here's some bear pause. We have 422, which is down from last time. Oil, energy stocks, BHP, European financials, Italy, Spain, France, UK, and Brazil, all coming in as bear pause warnings on those. So Italy and the Europeans, I'd be careful of. Germans, I'd be careful of. UK, it's just confused. And Brazil, who wants to go near that place at the moment? So financials, and Lloyd's Bank is also on bear pause warnings. We looked for times and trades, and I don't really particularly want to go through these, but if you want to look at them, we want to see if Goldman Sachs actually peeled off on its cycles. Notice here that it hasn't quite formed a reversal. Notice though it's forming a struggle streak pattern. So a breakdown below 200 would be a shorting opportunity. Looking for somewhere around about 195, which probably is not enough, but Goldman Sachs a little bit at risk. So we're talking about Coca-Cola, and I don't want to bore you to tears. We're talking about early May for these ones. Let's go on to bring out your deck. Are there any stocks in the US that you would like to have covered? Tim, are you still in Europe? Is hopefully your Aussie Euro's standing up well? Any US stocks that you want to do a bring out your debt on? If not, we'll move on. Any US stocks? Oh, here we go. Where are you going to bank, Shisha? Okay, hopefully your Aussie dollars are going to hang up there. VRSN, Verizon. VeriSign, not Verizon. Lots of ratios going into this, Jonathan. I like the way it sat on the old tops. So go for a break above $85. I don't think it's a bring out your debt, but did you buy it up here? Or is that a bank the cash? Let me know which one it is. It's come back into the retracement area. It's done some nice things. So I think it's buy worthy with a stop as low as $61.34. Would you agree or disagree there? My computer is doing funny things. Okay, so It's had a pullback for a couple of weeks on light volume. So this is probably going higher. And if you want to buy the breakout, you'd have your stop at $62.90. On the daily charts, shows a similar thing. Jonathan's been holding it since 2000. Well, you're a very naughty boy there, Jonathan. Oh. Okay, so where can you get out of jail? Wow. $84.31. The nice thing about it is it's not $8 anymore. So it's gone up well. Now, Ralph Lauren, would I short it because they sell ugly clothes now, don't they? Really? All their design sense has gone out the toilet with those big polo horse things all over the shirts. But then the Chinese like them, like the big Mercedes on emblems that they have on the newer Mercedes that are just distasteful. So where would I short this and which time frame, Gary? Right now, I would say you've only got $123 on it as a possibility, but you've also got $150.28 as a target there. So now, apologies to the recording. If you can let me know whether it's a bit not so good when I put it up there, I might have to load the original one. It's not really taking my voice. Now, Gary, on Ralph Lauren, if you're looking to short up at 150 with a stop above 153, hoping for 123.55. At the moment, it's gotten hit hard, and I think it should get hit harder for the way that it does things these days. This is a triangle. So if you're shorting it here, you really want to short it on another breakdown below 131 with a stop above 137, targeting 112. You're thinking 132 on the break of the, 102 on the break of the 38.2. Yeah, I think you'll find the way that it's structured there, though, Gary, it will probably, you've got an inverse head and shoulders. You've got a head and shoulders. Yeah, 100. Yeah. Well, you're looking at the old tops. Yeah, on that break of 120. A break of 120, then you're looking down here. But at the moment, it's going to triangulate, probably hit into here, rally back up here for a retest of that all that junk, and then you try lower. And 102 is the nice target. So, okay, what's going on here? Again, similar things. A bit of churning. At the moment, I wouldn't roll out 142 or 150 on that side. So I think you get a chance up here. Keep looking at that guy's head. It's disturbing, really, isn't it? Okay, so no more stocks. Let's move on. An hour on this. That's ridiculous. So we got any on back on our bikes? Guess what? There we go. Is it time to bank the cash? These are stocks that you've done well in and bank on your buy. Actually, let's not do those. On Friday, stock market rally may prove bogus in the next few days. They're a natural time cycle which point down to sideways. I still think the equities market's not normal when you take a guide of 8 years ago. Things haven't returned to normal. God has come back a little bit in the markets, but otherwise, there's still evil there. I think Germany is correcting still. European peripherals may get hit harder. So let's talk about Australian stocks. No, I can't help myself. I like Charlotte Rampling. I am a tragic, really. But I like her. Don't know why. Anyway, I am told that I shouldn't have the duplicate screens up there. I'm also told a few things that these screens don't look very good. Slideshow. Now we can see here that we have our All Ordinaries forecast. Apologies for people getting that stuff up on the screen, and I'm trying to get rid of it, but it doesn't want to do it. Okay. Basically, you've been disclaimed and warned a few times, but South 32 is just the best name ever, really, isn't it? Fantastic name. South 32 gives us all of the opportunity to think it's heading south. And look at this logo. It's even really confused itself. So South 32 heading south. They peeled it off. It didn't do so good. BHP rallied into the time when South 32 came out because people didn't want to sell their stock, and now it can roll over. So heading south on South 32. BHP didn't do very well. Now you can all read the disclaimer and warning prepared by Ideal Financial Group, CAR 299753 of Aruda Proprietary Limited, AFSL 338674. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group Proprietary Limited, you should obtain and consider our financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investing. You should also talk with JR about a brokerage account. Now, this is our forecast that the market should roll down into March, April, which it has, but then what has it done? It rolled a little bit later than April, and it's sort of been doing, this is a monthly chart, so doing like this is okay. Is it going up? Well, in keeping with the forecast, yes, it should be going up, but what we see here is today, like I said, we can expect a rally up and possibly, the last couple of days, I said we can expect a rally up, and this is using the share price index futures. You don't have any picture on your screen. Okay, so why have you got just a... I can't get rid of all these names. We're probably going to die. JR, if I'm dying and going to heaven, I'll come back in. At the moment, it feels like I'm dying and going to heaven. In the back seat of Greg Medcraft's Cadillac, actually. He's going to take me there. I'm sorry about the sick musical jokes. This is closed. JR, you're the man. JR, did anyone actually miss me? Am I still alive? Did this whole system go down, or was it just me? And the thing's just died on me. On my Cadillac. Okay, now I'm not sure which screen you are looking at. You're probably looking at the main one. I'm too scared to actually click on anything here in case I stuff it up because it keeps on blowing up. So I've gotten blown up and I've got to change a few things in my screen. Yep, thanks. Sorry about that. Unfortunately, this software has the ability to do something very different to what I'm asking to do most of the time. It's a very naughty screen. Okay, so what this means is I need to point at this one. I need also to give you the attendees link in case we get this again. So if you're going to, this is the ER room. And if you're not familiar with it, the ER room is not the best thing in the world, but it is an ER room anyway. and I'm actually in there. I don't think there's anybody else in there, but if you go in there, you'll be able to have a look in. That should come over here. A few things have got to get moved. That's okay. Here we go, the SPY. So today I issued and yesterday I said we would be going up towards the 57.55 area. It went to 57.62, 57.70, that's fine, and rolled over a bit. Now I believe that this stock, BHP, has been the one that's about the only one that's been holding it up because of South 32, and it got whumped today. So we've still got the chance now to go to 27.87, 25.81, $21. And let's see how South 32 has affected the overall thing. It's got maybe down here to $22, but $19.81 is still there. And notice we've engulfed the main body of last month's candle, which is not that positive, and it failed to go long on the monthly chart, which is negative. So at the moment, BHP smells. Now let's look at BHP's normal natural cycle, and I want you to draw your attention to a time back, and I don't know whether I'm hallucinating this, and I don't know whether I'm really hallucinating this, but in the past, BHP has had tops, if I remember correctly, in May, if I'm not incorrect. And I think May was April here, 29th of April 2011. Let's have a look at another May period. May was here, and it had a little top there. We've had May, had a little top there. What did May do over here? This was May, had a top and then a down for a month. Okay, what else is there in terms of May? Here's an April top, down for a month and sideways after that. Here's another one, May top. Let's go see. Over here, not a top. Over here, May top. Over here, March top, not a May top. May low. Recently, Mays have been tops. Let's see what the seasonal patterns give us. In terms of BHP. It tends not to have too good a time. Basically topping there and going into June and even going down into November. So staying away a little bit from BHP at the moment. May 7 years ago too. Yep. It does like to have a top in May. Notice here we've probably got some more trend lines that we can draw in that would be signs of breaking down. And below here, below that 29.70 area, expect it down. On the weeklies, still hasn't got off its downtrend. So BHP still disappointing. The behavior of the management still very disappointing. And Rio seasonal trend down into July, same deal, problem. Lack of rally. Couldn't get even to 61.8. So these ones are disappointing. And I don't think it's just real estate, iron ore prices. I think it's a problem of their own making. They are a bit silly, really. So we've seen the forecast. We've been through that. Calls for up, but I think there's a bit more problems because the XFJ is a problem. The banks are not performing well. Let's look at what the banks have been doing on the bigger scale. Monthly chart. Somebody took a stick to them today, so I am glad. Now, below here, and the bigger stick comes out, below 62.90, gets down to 57.70. They're not having fun, the banks, at the moment. Let's look on the weekly chart, see what it's been doing. It covered last week's range today. It was basically almost the same amount of range as it had last week. That's not good. A bit of a black bar, a negative bar, looking for 63.14. The only thing that's going to revive the banks is getting above 66.10. So we got another probable leg down in the banks. Let's see, ANZ, it was at the bottom of the cloud on the weeklies. It didn't make a break down, so you probably got a bit of support around about 32.07 if you're tempted to buy this thing. Let's look on the monthlies on CBA, see if it's done any damage. It's still trying to hold on to the 15-period moving average, and it is the next one. If you can get it somewhere, $75.91, that would be making some sense as an investor with a stop below 71.50. So still don't have that loving feeling for the banks. NAB, have no loving feeling for that. 31.59, 30.16. That's probably the best area to think about buying a little bit and hoping for on the downside $26.92 or $27. So again, that fear of higher interest rates on the banks couldn't even rally after. It's still weak. It's still weak. I have a funny feeling Westpac's also looking similar to that. Westpac's even sicker, 31.52. They just couldn't get off their ground. $26.33 Westpac area possibility. Let's look at the other banks which worry me. Did anyone watch the call to get out of the banks that I had a week or so ago on Your Money Your Call, or whatever? What is the other program? Buy Wholesale. Bendigo Bank, that's not good either, really, but it's better than the other ones. Stop would be below 12.21. What about Subcorp Bank? Subcorp Bank, not doing too badly, but probably catches up with its friends. 11.80 would be a support area to look to buy, and overhead resistance to $13.50. What's the next one? The other one's BOQ. Now, if there was a property boom in the Gold Coast, you would not have noticed it. There are wandering bands of Chinese, mainland Chinese property buyers. Now, we must be getting down to the more marginal property buyers. They all do the same thing, but they all don't have all equal amounts of money. Now, the Gold Coast is not enjoying a boom in property prices. Neither is Perth. In fact, it feels quite depressed on the Gold Coast. I thought there'd be a bit more life in it, but it feels depressed to me. So that means the Bank of Queensland, while it's in the triangle, has the suspicion of going lower. It's a sell on a breakdown below $12.95, looking for $12.18 and possibly $11.39. Full stop, new line. It's going sideways at the moment, but it's intercepted the old tops, and so it's not one of the fun ones, because so many of those people who lived in Queensland were doing all those magical fly-in, fly-out things. If they weren't all living in Bali or in Queensland, and the hotels were not full. The skyline was empty on the weekend. Not a good look for a holiday destination. Now, maybe most of Brisbane go and hang out at the Sunshine Coast, but the Gold Coast was not feeling very good at all. There wasn't much traffic either. You could get around pretty easy at 5 o'clock at night, peak hour. So a little bit risky owning BOQ. 1271 would be the short-term target area if it continues down. It's got some problems. What other indexes can we rely on? Well, there's the gold index, isn't there? Or is there? Gold index hasn't got long on the daily charts yet. On the monthly charts, it's still only corrective. and it's headbutting the 30-period moving average. So be careful about the gold index. I've said this before. It's boring. Newcrest. Still 1575 target, but is it really doing the business? No, I don't know. You've still got a bit of a rally in it. The small ones are going. When the small caps are going, it's a little bit of a worry because it's usually the tail end of a move. Not a lot of need to do anything much. Okay, so let's see if we can find another index that might be interesting. Materials. Materials is, where are we? Unfortunately, the materials is in this stage of the cycle right now. It's in that sideways choppy movement. So we can't expect good friendship out of the materials. What about the energy space? Crude oil's had a good run, but the energy sector hasn't. And we can see the energy sector not getting above those old tops. So that makes me feel like 99.29 is possible. So energy doesn't give us any joy. What about healthcare? Notice I'm looking on a monthly chart too when I'm doing this. Healthcare, still 2 months down, still overbought hellishly. A normal reaction would be 17,021 and a normal correction would be to 15,022. You just wonder how many fund managers have just can vomit out healthcare stocks. Probably can do a lot, but that doesn't give me anything. So your normal big retracement is to here at 15,022. Your corrective target has been exceeded, and you'll get out of jail card is around about the 18,718. Your oh shit, I'm stuck with too many healthcare stocks is if it breaks down below 17,900. That's where most people start to panic, and 17,000 is fairly quick. The Extra Century Property Stock Index rallied a bit, but this is what's going on here. It's had 1, 2, 3 months of down. A breakdown below 1220, which is a target area, could cause it back to settle back down on the old tops around 1136, 1104. And on the monthly charts, the weekly charts, it's tested that bottom. So here's the hinge point, break below 1240, expect 1204 and 1220 certainly. This looks slightly corrective, but it's not forming the right sort of pattern for me. So weekly's not showing anything particularly strong either. So where can we find any good stuff in the Australian indices aside from shrapnel? Well, we see Telstra come back on a telecom index, we come back on a 38.2% retracement. If it can't hold here and it breaks down below 2176, we look for 2110 again. If it breaks 2095, then it rolls. So the dividend chasing world is a little bit different now, isn't it? 1, 2, 3 months of down, it's got to start going up, and that would be a close above 2277. So aside from little shrapnel stocks, the banks aren't going to drive it. The materials index doesn't look like it's going to help much. It may not hinder, but it won't help. The energy space could be a hindrance from its overhead resistance. So where do you put your money? People will say, you can't put your money in cash. Should be putting it in the general index. General index retraced up to close to the retracement, up to close to the middle moving average, and had a crappy day today. 54.69 or 55.89 still looms. We reduced our self-managed super by 3% today. I believe I put that up there. I hope you got the message. But the swing is back down. It's best not to get too excited, particularly if the US wants to roll over. I think you'll find you're better off sitting on your hands, keeping money in cash. We had a go at buying down here, a la Joe Hockey, but on our next move, we'll see if it can hold 55.89 or 54.69. On the weekend, I was the only technical analyst with a bearish slant on the Australian SPY and the XJO. The rest of them were bullish in this huddle of some pretty smart people in there. But I was the only one going, and I was listening to their strong opinions. I'm going, no, but I think if it just rallies to 57.55, and if it rejects off there, then it's going to make new lows, and that seems to be the way that it's going. Okay, is there anything more exciting we can do? Boom, boom, boom. Here's our bull horns and bear paws, and I'm sorry for not displaying it beautifully for you. Ignore ANZ. AMC is on bull horns yet again. I think it's had too many bull horns, because I just think it's got too many. This is corrective in nature, and the seasonals point down. So expect more downside for AMC. Don't worry about the bull horns warning. BLD. Now this is probably lower than you remember it. No, it's not. Okay. We've seen a 2-week rally back into overhead resistance, and it probably on a breakdown below $6.36 should start down lower, because seasonally it doesn't have fun into July. So don't touch that. So we're going to Iggy that one. CBA. Iggy till mid-June. Okay, CCL. Let's have a look at that one. These are all the bullhorns warnings, and we're seeing whether we want to yay or nay them. CCL. We thought we liked it. Maybe mid-June. Check out mid-June. CSL. Again, a lot of these little ones not been that we come and rely on. CSL. Seasonally, doesn't have much fun till July, so ignore till mid-June, especially with fund managers owning too much of the stuff. As I said, if the market wants to fall, they usually buy healthcare stocks as a defensive. What is a defensive healthcare stock now? Now, this is GPT, which is not bad on the seasonals. It's sort of rallied into its time, but it's not also good either. So what do we do with this? If you want to buy this, buy a break above $4.55, hoping for $4.73 or $4.80. Your stop loss needs to be planted firmly below $4.38. Maybe, baby. Okay, IAG. IAG. Trying to bottom, but needs to close above $5.80. Another property stock on bullhorns warnings. It's not getting through that overhead resistance. If it can, it's good. Now, maybe it's this week for a quick rally before a dip into July. So NAB, let's see what it says. Wait till mid-June. Is anyone disappointed about this? We're still not having fun yet if you own stocks. What are we going to get some? SGP might stay sideways till June, but better off waiting till mid-July. Suncorp, I believe we've had. Did we have a look at? We had a look at Suncorp. Let's see what it likes to do. Suncorp not getting above the overhead resistance. It still probably is a bit sus till end August. Now Westpac may be okay. Nibble. Just off this area here, between 31.56 and 32.08. So this bank run was a bubble which has been doubly retraced almost. How many Australians are left holding banks and how many offshore were dumping the banks here? Now these banks have now fallen $40 to $8. That's a 20% move. Now, who defines a bear market as a 10% move or a 20% move? This, in the dumbass world of fundamentalists, should be classified as a bear market by now. Yes or no? Will they do that? I doubt it, because they'd be too scared to say the banks are in a bear market. And when did I say banks are sanks? That was over here. Boom. I think that's it for covering. So the Bullhorn's warnings have got multiple grains of salt. Here's our bear pause warnings on STO. We did think $10 was a nice, likely capable event, or $10.31. It didn't get there, did it? Now it's trading $8.20 after smacking into the overhead resistance of the 30-period moving average. It's not the best thing since sliced bread, and will continue not to be the best thing since sliced bread until it makes a new move lower. Don't get too excited about that. So has anyone got any things that make sense? Really, none of this makes sense really particularly. I wonder if I can display it over here. That's pretty cool. Now we've had some ones. ALS has been working nicely, which we all know. So ALS, we're looking to buy in the next 2 weeks. That's been going quite well. Again, these are recovery mining services stocks. And it's not ALS, it's ALQ. I get it wrong every time. So here we see it's really target $6.66 is nearing close, and a failure to hold above $5.90 puts it uninteresting to us to buy. So ALS, tighten your stops and maybe take some profit. The other one that we wanted to short was the Great Unwashed AMP. Gary, I lost a few brain spells with your mate on Friday night, which he probably told you. Now, AMP still hasn't really gone into the mega short period, but you might want to just give it a tickle on the downside at 642 with a stop loss at 667, targeting $5.79 or $6.11 more accurately. This little movement down is nice to see, but it lacks the certain volume that I would like to see on the downside. So CSL is saying buy at the end of May on this particular thing. And CSL's not gotten hit hard by volume, but maybe you might get $83, $84 on this one. That's the buy in the end of May. We have to wait for that. FLT, buy the end of May for run into late August. Let's just see where that one is. If the Chinese stop traveling, which by the flight last night, they are certainly not, but when the Chinese stop traveling to Australia, then we can probably see Virgin and Qantas losing some money. They've doubled their prices on the flights, on the basic flights. They've decreased their services on the basic flights. If you want anything that resembles economy class, you've got to pay for business these days. But the Chinese don't know the difference, so they're giving them a bit of curry. When they get a little bit more ahead of the curve, they'll have a bit of upset. Now, we can see Flight Centre is still doing pretty good. And maybe if it comes back down to 43.40, you'd be loading it up at the end of May for run into late August. NAB is also a sell in the end of May for down into June, and Westpac is also the same. So so these ones are not good. Our banks are not good. Not good, not good. Now, Qantas and QBE, let's go for them. Let's see what's going on with those. Qantas, this is a weekly chart. We see it normally has trouble into June, July. Now, why is that? I don't know. Maybe everyone drives down to go skiing, but June, July is usually the trouble. So you might think that it's overdone, and I certainly would like to think so too. So maybe a pullback. Where can it pull back down to? Probably as low as 319. And certainly 345, a break below there is starting to be a problem. So is it dead yet? We're seeing a little bit of it, but it's not dead unless it's really convincingly below 340. And it's coming into a bit of time period. So what you'd expect is a bit more churning. You can see a fourth wave there, possibly a higher level fourth wave. If it holds above 349, you still and can last into that June period, June-July period, then you're probably okay to hold. You can get really scared below 313, and I know the way that he's doing it would mean that your stops need to be, it's quite leveraged, so your stops are that way inclined. Get them closer than where he suggests, or at least do that option protection thing that he does. QBE suffers from a seasonal turpitude for June, usually, and normally has its other low around August. So it's been doing okay into this point, So rolling over is probably what it should do normally. Where can it roll down to? Uh, 1385 or 1335 with the 1293 and 1335 zone in there too. So somewhere in here, if it keeps going, 1250 for the old fourth wave low. So a little bit dubious. So if you're thinking about banking some cash, it's not terrible, Muriel. It's not terrible banking some cash. Maybe reduce your position by 1/3 to 1/2 and say, thank you, that's been a really nice run. Now let's have a look, see if we've got some volume doing the destroying in here. That was not so good today. Let's look at, I always find it suspicious when people start trading in the queues. Higher volume today, yes. And didn't like the old tops. It hasn't fully broken down, but below 1360, not so good. So a good idea to bank some cash after that impulsive move. Anyone got some bring out your deads in the Australian stock market? Okay, no bring out your deads. Okay, that's all good. So we've been safely protected. Anyone got some bank the cashes? We've done QBE and Qantas on bank the cash. And I do really think the Chinese are going to be turned off in the next couple of months. Just got that feeling. I think they've got they're going to run out of puff on us. Maybe it's because they're summer and Europe. Maybe they all go to Europe in summer. But I think you'll find the travelling of the Chinese in Australia won't be as much. What that will mean is they'll probably look to buy properties in Europe more than Australia. So we've got no bank the cash, okay. And back on your bikes. Are there any back on your bike trades? Okay, I'm just doing a scan of the indices to see if the machine's got anything good. Basically, the conclusions are, I'll give you the drum. It's not that good. We need some more. We need the US market to really rip raw. I suspect it's in a position where it can roll over. And there's a CVT, Covata. Covata forming a fourth wave triangle at the moment. It's gone a little bit too deep, but that's okay. It's not bad. So as long as it holds pretty well above here at 45 cents, it should have a target at 61 cents or buy a break above 69 cents. Yeah, I wouldn't do 55s. I'd do 57s, Gary. I mean, you could be long now with that stop. Really, this is the monthly. So let's go down and see on the weeklies. Yeah. You could do 54s on a weeklies. It's okay. And at the moment, it may, yeah. On the dailies and on the monthlies, you're better off the above 55, more above 57 or something like that. And then you'd be expecting 70 and holding your breath for 81. So really, the conclusions are same as last time. Banks suck. The index isn't going to do so good. The rotten tomato approach. Okay, I'm not sure I can grant all of your wishes there, Gary. Okay, now let's do some quick commodities because I am actually tired, and I apologize. I wanted last week. Some of you came on, and I wasn't there. I had set it up, but completely forgot I'd set it up, and I didn't think I announced it anyway. Apologies to those who hung around for half an hour waiting for me indolently. Baltic Dry Index, the way the market world moves. If it can get above 668, then the world changes and becomes a very fun place for shipping stuff around the world. Full stop, new line. At the moment, I'd find that hard to believe because 3D printers should be destroying the manufacturing of spare parts and little trinkets that we all need. But who knows, maybe it's cheaper to get it shipped from China to here, manufactured, and then to do it on a 3D printer in Australia. But I don't know what the economics of 3D printing is. At the moment, 668 would be a sign that we've got some excitement in the Baltic Dry Index. In terms of the, and I better put up a disclaimer and warning just quickly. And these are, okay, let's do this one. This is for the benefit of the recording. The big gorilla in the room, welcome to the commodities forecast for 2015 with dollars. The big gorilla in the room is the 800-pound gorilla, which is the US dollar. And the US dollar has been conveniently correcting. Has it not? Does anyone disagree that US dollar has been pulling back against its overall big trend? So when we think about the US dollar, we're no longer hearing words like the US dollar is going up forever. We haven't heard yet. Words are that the US dollar is a piece of shit. So at least I haven't. So 92.44 has been my target area in the US dollar index, and I'm got a little bit sidetracked here, but I do want to just say back down to here into these zones is where I think it should come back down to, and then we can have the chance for it to go higher. So somewhere between 93.58 and 92.90 is possible, but with a focus on 92.44, which I've said in the forecasts. Sorry, said in the speed webinars. What happens with the US dollar index this time of year is the next salient question. And we see that the US dollar at this time of the year usually has a bit of a rally into early June, which is possible, and then a dip down into July, which is sensible. Notice that it was a little bit late on the decline, but it's still been declining. When these two areas here, when these two lines here cross, they'll tend to fold back over each other, and I think the US dollar will take off again from that point. Now, we've been unlucky enough not to find a wave count on the US dollar index, and I don't know why that is. But overall, I would say this is a fourth wave, and fourth wave of lesser degree lands somewhere around about 93.55, which it already has. So we should be on the lookout for a change on this one, dollar index. If that happens, then commodities are not going to be as much fun. So we might wait for a little bit more into mid-July for the dollar index to turn around and start up again, but the commodities won't be as fun. Now, when we look at the uranium stocks, we can see uranium has been negative, which is forming five-wave structure to the downside, and gets more negative below 339. So not a fan of uranium in a big way at the moment. Chinese iron ore. Now we've seen Chinese iron ore try to rally and fail. This is the monthly charts. Monthly charts has had 1 month of up. Write this down. 1 month of up is not good enough. See here, we've had 1 month of up this one, 1 month of up that one, and then down. 1 month of up this one, and then probably down. So don't get too excited about this. Volume had been moving to the downside. Moving averages are negative. Best to just stay away. Crude oil, we were looking for $68. Is there any reason to change this? Good question. I'm glad I asked it. So far on the monthly chart, you'll see that it's only been up for 1 month. So far on the monthly chart this month, you show that it's actually not progressed in the whole month. It's back down. It's actually yesterday's price is exactly where it opened last month. Wheaties. Okay, I'll have a look at Wheaties. If you can give me questions on commodities, because I don't want to go quickly, but I do want to answer your questions. And look at stuff that you're interested in. I'm not going to go through the whole lot of them because I'll fall asleep seriously at the table here. Now, I was hoping for $68, wasn't I? So far, I can see no reason to say that it's not going there. Sorry for the triple negatives. We can see a little bit of a triangle in the weekly, so there's still possibility of $68. The real disaster point is below 54, so not super negative on crude oil, but I do notice that the Australian energy space has not gone anywhere. Do I see this rally as a fourth wave mark? On what time frame? And the answer is yes, my target is built around a 38.2% retracement up to there on the bigger picture. Yes, so you're quite right. That's why the 68 is a target. So at the moment, we're in a fourth wave on the rally up and a fourth wave on the rally down. The issue with the rally up, the movement down. The issue with this move here as a fourth wave is it doesn't feel like a fourth. We'd have to have some sort of crappy churning up here, which I'm sure we did actually. So this is pretty horrible here. It's triangular sort of wave 2 if you like, but it's not the best one. The answer is I'm using that as a target area here, but it's not. It's more like it's just on ratio, not anything else. So we've had a lot of fun in the natty gas. Natty gas has been booming. And it tends to do that. So it's probably good till July on natty gas. Now, Gary is talking about DEC wheat and Z5. Now, I got a monthly on DEC wheat. And Gary, do you remember when a wheat contract opens and closes on the electronics? Because I really have no clue these days. I just think it has a couple of hours off during the day, during our day. So wheat it is interesting because it's held at $5 and it's come back. Now, this is the December contract in wheat, not the real the one that we would normally look to. It's usually July wheat or something like that. So okay, so yeah, July's got more volume. It's definitely July that's got the volume, but wheat is, yeah, the deck wheat's actually forming a nice shakeout bottom. 560 is the nice area. If you're thinking about being long, stop is at $5.12, target 560, above 575, get excited for $6.62. Now we'll go straight to gold, and I'll do a wave count on gold. Now notice gold is still not giving us any joy, love, peace, and mug beans. It can go all the way up to 1308 and still be going down. I think 1244 is the retracement, and you'll notice that here it's calling itself a double zigzag with pike, with a AB, and this is C wave and a wave 2 in a sort of corrective fashion. So breaking below 1197 again would make it go down and to those deeper targets. So gold, I'm still not in love with. US dollar index, there we go. Here's the US dollar index. It's come up with a result. It still thinks the US dollar index is corrective. We'll do another one on copper. Copper has some pretty big overhead resistance at 3. Getting through that's going to be difficult because there's sure as hell there's some big Chinese concern that's bought too much copper and is sitting up there. Now, what it's done is it said this is wave C and it's coming up into wave 1, and the big wave was wave 2. So here's your hinge point. It's above $3.05. If it can do that, then it's doing good stuff. In terms of the negative to down movements, these get out of their own way above $2.96 or whatever number this is for copper per pound. So that might be interesting. If you do want to run it, you have your stop below 260 on a bigger scale. So maybe that's all right. Now gold, 1244 is the logical area. Volume is a little bit too high for my liking, but it still should get to 1244, even though I don't like it, still in the longer run. Your worry would be below, on a first instance, below 1210. Now the bondages, let's have a look at the US 30-year bonds in context with a bigger picture look. And I think they've probably bottomed on Friday, but they don't think so by the way the price action's going. We did take profit on 1/3 of our 2/3 position. Now it's come back into here. It's still not that flash. Let's look on the weeklies. It does like to bottom into early June, so maybe you hold off to then looking if you're going to buy. We'll hold the rest of our shorts for a little bit longer. Hopefully we can get a nice rally back up to 160, 162 to really smack the monkey with the bonds. Big triangle in the bonds, well, at least a triangle possibly forming, and rally back up into 25th of May on the shorter term. Do we have any other commodities which are exciting, thrilling. Coffee. Let's do a wave count on coffee just to make sure we're not talking too much. Coffee still points down on the forecast. We've done that before. The moment I still feel this could be that rally to 150 before another move down. This is a congestion area and it should be having another move down to 120 or 130, sorry, or even 102. So nothing really super fantastic for coffee. Any more commodities that people want to follow? I think I really need to get some sleep. Let's have a look at the euro. Let's swap over to the euro. This is a Forex forecast, and here's a disclaimer and warning. And the exam on what that says will be later today. So we've got coffee here. I want to see what the euro versus US dollar is doing and what it thinks. So here with the euro, 118, that would be a fourth wave target area. It's backed off a little bit today, but that's par for the course on Friday. They did the opposite of what they did on Monday. 118 would be the retracement area, and a further decline could emanate from there. So nothing really too different from what I've been saying in the webinars. The machine thinks it's doing a fourth wave. I agree, and then down. See, if the euro rallies, gold can rally too and then get knocked off. So that's okay. Bonds and the US 30-year bonds have been working okay too. Now, anything else? Anything really? Let's look at the Aussie dollar. We'll do a chart on the Aussie dollar and then we'll get out of here. Unless you've got, if you can give me some pressing questions that you have, happy to answer them before I pass out. So the Aussie, while the euro is rallying against the US dollar, the US is getting weaker. The Aussie is having a reprieve. If the US dollar gets stronger, the Aussie dollar will get weaker. And notice it's saying that's wave 2 on a big count. That's pretty impressive. If that's correct, I would love that because I love going to America and buying cheap stuff with a very strong currency. I don't know if that's going to happen, but I can confirm that it's more likely to happen on a break above 90 cents, which is only 9 cents away these days, or actually 10 cents away. So nothing, everyone's been banging the drums about how bearish it is. I think it'll hold that 73 cents. And if it can hold above 90 cents, then that's pretty hunky-dory. So that's the euro. Let's look at the Aussie. And I might do a Forex one again, but like at the moment, I don't see that. I don't see in the Forex and commodities. I don't see it as really important, as really needed. 0.8383. Now we're going to start going into the silly season for Europe and Northern Hemisphere in general, including the US, where they all go on holidays. That's coming up in a month's time. So the currencies generally get more erratic, more illiquid at that time. So that's probably when you see the Aussie hit 83.83. Then after that, it's got a chance at 72.40 or 71.85. Below 70 cents, then we've got a catastrophe. But I think it'll probably hold that 71.85 area. Thanks everyone. I hope that was good for you. I am getting tired of slicing up webinars and things, which I know probably makes it easier for you. The recording should be up, God willing. It's got it's had a few little heart failures, so the recording will be a bit all over the place today. So thank you. Have a very good night, and I wish you all the best. Thanks, Stephen. Have a good one.